Hey everybody, how you doing? Hopefully you're having a nice weekend. Just a really quick video this weekend. We're going to go through a couple index charts. I'll give some general thoughts on the market, and then we'll take a look at some opportunities that I'm keeping my eye on for next week. So here's the SPY, S&P 500 ETF. We talked about last week, what's going to happen if we start coming down, where are we going to find support? We got our answer, and in my opinion, we found it just where we needed it, right around this 270 level. That was the highs back there in April. So was resistance, turned into support there in June and July. And we kind of dug in on that level last week. So in the very short term here, we established a higher low. If this digs in here, that low is higher than this one. So maybe we get a really short term trend up, but that's just really short term. Maybe we get a retest of this 280. So we'll have to see. A key level to watch next week. But longer term, I pointed this out. For the last few weeks, we had this bearish MACD cross, which in the past has been a very important signal here. We had in 2015, which basically meant we didn't have another new high for 18 months. Even these little ones here in 2011, you see it crossed back up above it pretty quickly, but in the meantime, the market really didn't move. So at a minimum, it's meant a pause in the longer term uptrend in the market, or worse, it's signaled these big market downturns in 2000, 2007. So it's worth paying attention to. Markets don't follow scripts. I don't know if this will end up meaning anything or not, but what it does mean is, the momentum is kind of turning down for now in this long-term uptrend. So we'll just have to wait and see how that plays out. But something to be aware of, longer term, shorter term, we dug in where we need to. So we'll just have to take it day by day and see what happens. Small cap chart, here's IWM, Russell 2000 Index ETF. Again, longer term, I think we have a trend change here. We're under this downward sloping 200-day to 50-day. We have this big overhead level around 160. So if we stay below that, it's hard for me to get very bullish here on the small caps. But again, shorter term, we dug in. We established a higher low here. We kind of dug in around this 150 level, which is higher than we ended up at the end of October. So that might be a little spring to maybe retest that 160 area. I don't know, but shorter term looks maybe we get a little pop next week on the shortened week. But longer term, I think the trend change might be there. It still has a lot to prove. I did want to point out emerging markets. So this, you can see here we're down a good 22% from the highs beginning of the year, downtrend all year. But we did dig in here. This is a level here around $37, $38 that acted as support for all these years. Came back above it, turned into resistance, and broke through it. Now we retested it, and it bounced there. So kind of got my attention there. That's also about the 61.8% retrace from the bottoms here at the beginning of 16 to the top. It's retracing about 61% of that around that 37 level. So an important level to hold, and it did hold. So now in a shorter term time frame, and I have no position here in EEM, but it's struggle with this 50-day. I pointed that out. I don't always use moving averages as support or resistance, but it's hard to ignore when you can see them bounce like this. You can see it every time it touches it. It comes back down, cut above it a little bit, but came back down. But so it's right there at that 50-day. And more interesting, in my opinion, is kind of like on the SPY. Every time it would come down, it would make a lower. You could see recently it came here, came down, made a lower low. Here, lower low, came back up, lower low, came back up, higher low. This low is higher than that one. So maybe if we can dig in here, it might potentially be reversing this trend. And you can kind of see too, it's a little bit cleaner on the weekly chart. You can kind of see that if we just kind of draw like a trend line there, if we can get back above that trend and reestablish ourselves above that, maybe the emerging markets start turning around here. But they still have a little bit to prove, still in the downtrend, but I think they might have a chance here, and that would be a very, very bullish development. So we'll keep an eye on that. So let's look at some opportunities I'm keeping my eye on for next week. First one is GKOS. This one had this huge gap up here with big volume at the end of August. And ever since that, it's just kind of been digesting these gains, just really orderly consolidation here. You can see it just kind of slow, steady the last few months. So if this starts resuming the uptrend, this would be one I'd definitely be interested in the long side. Obviously, I want it to break above this trend line. And then for the horizontal, I always like to trade off a horizontal level. I'd look for it to maybe, close higher above 63.50 or so, maybe $64. That would be the horizontal level I'm looking for, which would also indicate that that trend line would be breaking. So this is what I'm keeping my eye on. GCOS, BRSK, just to really, obviously pull back, really nice uptrend here. And it might be breaking out to new highs in the uptrend after a slight consolidation. So that's just the kind of entry that I like to look for there. Around 120, 124 is the key level. That was the highs back there in September. Kind of hesitated there, really slight dip for a couple of days. Now we're right back there. So if it could break above that, I think this would be a nice potential long. If it's me, I don't like to strangle my stops, put them too close. I'd probably maybe put it underneath those lows from last week, or maybe even a little bit lower than that, just because this trend is so nice. So that's VRSK. Now there's a lot of these REITs here that look good. I pulled up 3 charts. There's even more of that if you start looking through these REITs. But this one is EGP, East Group Properties. Really simple setup here. If it gets above $100, this is one I want to be interested in. It's acted as resistance here in August, September. Kind of broke above it, and then slight dip. So if this one starts moving higher, I think this one looks very attractive on the long side with a stop, not too far below. Some similar setups here, TRNO and other industrial REITs. Like I said, a lot of good looking names here. Same thing, 39 resistance here. Couldn't quite make it back up, and now it's consolidating right there. So if it starts moving above that level, 39.25, 39.50, that would definitely get me interested in getting long this one. I like this one quite a bit too, REXR. Same kind of setup, 30, 32.50, $33. Resistance here and here, kind of broke above it a little bit, and then it's just kind of pulled back. So if it starts moving up again, I like REXR on the long side, as long as those levels hold. Now, run. This is one I did enter last week, but it's still buyable in my opinion. So I've included it here, but it, had this level here around 1160, kind of acted as resistance here, dug in there, throughout the summer and into the fall. Then it broke above this downtrend line from July. And I think it looks pretty good here. I entered it, I think I entered it Wednesday as it started to peak above. Then had that nice follow through Thursday. So this is one to kind of keep your eye on. I think we might get a run. Maybe we retest those old highs from the summer. But it's one I like. The risk reward side, you can put your stop. It depends how tight you want to put it. You can put it underneath the lows from last week. That's what I like to do sometimes. Or if you want to get a little bit more room to run, it's a little bit too much room to run. I was going to say you could put under the 200-day there, but that's more than I'd be willing to give up on this one. But in any case, run looks like a nice setup. And how about Apple? So here's the weekly chart of Apple. You see this uptrend line in place since the middle of 2016. Had a bounce here, and we're right back there. So we have that, and then we also have this last consolidation zone. We'll call it 185 to 192 here. So we're at that level, and then I'll go back to the daily here. So we have that trend line. We have the last consolidation zone, which may lead to acting as support, and we're right at the 200-day moving average. So we have a few different things that may potentially act as support. So this is one I actually entered this on Friday. My stop is going to be just below our lows from last week, so around 185 or so. So a pretty tight stop on Apple, but I think it's setting up. Now, one thing to be aware of with Apple, all these shares traded up here in September and October, between 215 and 230. So that's a lot of overhead up there. But so if we get to that area, I'd be kind of careful. If we're fortunate enough to get to that area, I would be looking to sell some or a lot of my position. But from here around 195, I think there's a good chance we get a little bounce here and over 200 at a minimum. Maybe we kind of get up to that 215 level, which would be the underside of those lows there from earlier in the fall. So I like the setup. I always call it potential support because you never know. We have the 200-day, we have this uptrend line, we have this consolidation range. It all looks good. Have all these lines drawn on the chart, but that doesn't mean price has to respect them. So, but the point of that is you identify, you know what your risk is. If it gets below that, I'm out. So that's the case with Apple there for me, if it's below 185. So giving that one a try, it's still setting up. So keep an eye on that one for next week if you're interested. Then a couple other ones I like. This is GTN. This is the weekly chart. I've talked about this one before, the 1760 area here, acted as resistance all these times going back a number of years, broke above it. Now we're kind of coming back down. You can see we had that huge break last week, and then this week we kind of came back down. So if it kind of stabilizes and starts turning back up, that would get me in GTN. And I did get stopped. I tried this one a few weeks back and got stopped out of, but I would definitely try it again here above the above 18. I think the setup looks nice, so I'm keeping an eye on that one. This is one I'm also long, but it's right back around my buy area, so I wanted to include it here. This $4 $4.25 level, again, this was resistance here, kind of a cup and handle type look here on the weekly. I'll zoom into the daily. So if it could hold above this 410 or so and start turning back up, I think CRNT looks like a nice potential long. Now, for me, a stock, it's trading under $5. It's had some really big volume lately, but typically doesn't trade with a lot of volume. So I would allocate, a normal full position for me is about 7% of my portfolio. I never want to risk more than 0.5% on an individual trade. So given that, like if I'm investing in like a CRNT, it depends on where my stop would be. Of course, I kind of use that to dictate my position size, but I would take no more than a half position here, which would be like a 3.5% of my portfolio. But in any case, this is a nice looking chart on the weekly. If it starts digging in and turning back up, this one looks like it could run. And then let's go over one more. DCO. This has this level here around 41. You could see it acted as resistance all these times. Came back down, hit that 200-day, popped back up, and then last Thursday on the 8th had this huge candle. Just didn't really know what it wanted to do. It had a span of about 14% on that one. So kind of some indecision there, and then it ended up closing back above this 41 level for the next few days, and it's kind of pulling back there. So if it kind of settles down a little bit and starts moving back up from this 41 level, I think this makes for a nice potential long here with a stop, again, not too much under 40 on this one, but kind of watching this one and seeing what it does. So I'd like to look at that one. I like to look at all these. So we'll have to see what next week brings. It's a shorter week with Thanksgiving. Typically I think a lot of people think that and historically that's been bullish. So we'll see. Shorter term index charts, dug in where they needed to. So we'll just have to see what happens tomorrow, if they kind of continue that and move up and test some of that overhead that's up there, because there's plenty up there. So if they do start to test that, we'll see how strong this market really is. But we'll just have to take it one day at a time and pick our spots. So hopefully you found this video helpful. If you haven't checked it out, check out ttptrading.com. We're running free trials right now for 30 days, so should be long enough to kind of get a good flavor for what we do. So if you want to check it out, go ahead. Like I said, if you don't, that's fine too. Hopefully you enjoyed the video, and hopefully you're having a great weekend. Thanks.